And welcome back to the Halftime Report. I'm Bob Pisani. Time now for ETF Edge. Check out gold's wild ride. The yellow metal has seen a huge rally since trade uncertainty started up again. That was at the end of May. It's rallying right now. 6-year high today, now up 19% for the year. Gold mining stocks have had an even bigger rally, up 42%. So how do investors play this precious metal? Let's dig deeper with Andrew McOrmond. He runs the ETF business at WallachBeth Capital. Steve Grasso at Stuart Frankel, of course, a regular here. Andrew, you run the ETF business over there.
Yeah.
Are clients asking now to get into gold ETFs? And what's the rationale? Why are they telling you they want them?
I think the rationale is they're looking for a place to hide from the volatility, right? I mean, you look at VIX-related products and ETFs, over 15 moves up and down over 10%, give or take, in a 3-month period. Gold, none. It's a place to still have money to work, making assets, a potential to go higher, and a safer haven.
And never underestimate the effect that the central banks can have on gold and on Bitcoin. So when you have these risk-on moments where you see the central banks are devaluing everything, people rush back into gold, and I think that's what you're seeing now.
And the dollar, of course, also influential here. I mean, generally, dollar higher is not necessarily good since gold is dollar denominated.
Those correlations don't seem to be working.
Yeah, they don't. Why is that?
I think that people, it's the basket of the global concerns versus the basket of people worrying about governmental intervention. I think that's what you're seeing.
And the jury's still in on the Bitcoin. You mentioned that. Right. So I think people are kind of staying away from that. Right. Gold's the alternative.
But there used to be an inverse correlation between gold and Bitcoin, and now they both seem to rally for the same things.
Andrew, gold versus gold stocks. We always get into this. Right. Gold stocks have the differentiator, they're stocks, and sometimes they move with the markets and independently. Gold stocks were horrible performers for ages and ages, 4 or 5 years, and this year they're far outperforming. How is the investor look at gold stocks versus owning gold directly?
Well, it's quite simple. The beauty of an ETF, and you follow the leaders, right? Paulson was one of the first big hedge funds to use GLD, and GLD, you're holding gold, actual gold in a vault, right, that's tracked, and that's when you don't want to have futures and rolling in those costs. And also with the stocks, I like the GDX because the ETF dampens single stock risk that can come with those mining stocks.
GDX means gold stocks.
Right. Yep. So GDX has always outperformed both up and down, and we've seen the outperformance sometimes 3-to-1. Now we see it as 2-to-1. Yeah. But they're masters of their own destiny, so they can decide. And then there's a premium for M&A too. Yeah. So on the way up, at least there
Tough call to make. Finally, there is ways to own gold in gold vaults, different kinds of gold ETFs. There's the GLD, that's the big one, but there's a smaller one that actually charges less, BAR, that's been around for a while. That's attracting assets. Is there any difference?
No difference at all, except it's half the cost. It's from Granite shares, and again, for an investor that's trading here every day and watching the show, it's a penny-wide spread, sometimes 2 cents at the most. So cost to get in and out cheap.
So you save what, 17 basis points?
17
for
basis
essentially
points
owning the same thing. There isn't any difference.
17 basis points is the alternative of having a vault in your house and putting gold in it.
Okay. Is there any risk? Sorry, is there any risk one versus the other?
No, because it's still backed by the gold. I would say if you're doing, if you're an institution doing hundreds of millions of dollars at a time, then GLDs are more liquid.